The world sees Jeff Bezos as a retail genius who simply sold more products than anyone else. But the true secret to his empire is not what he sold, but how he accounted for it. For decades, Amazon operated on a financial principle that rewrote the rules of capitalism. They perfected the art of appearing unprofitable while generating oceans of cash. This is the hidden financial playbook that made Amazon and Jeff Bezos unstoppable. It starts with understanding that, in business, profit is not always your friend. Profit is what the government taxes and what competitors use to measure your success. Amazon realized that minimizing taxable profit was the ultimate competitive weapon. Today, we are dissecting the secret tax and corporate loophole that fueled the rise of the trillion-dollar giant. We are revealing the mechanism that allowed Amazon to grow at a reckless, devastating pace. The secret lies in the simple, legal mechanism of perpetual Traditional businesses aim to show a profit to please shareholders. Amazon's model was to take every dollar of revenue and immediately plow it back into expansion. They invested in more warehouses, more trucks, more robotics, and more servers. These massive investments are classified as capital expenditures or research and development, and under U.S. tax law, these expenditures can be immediately written off or depreciated over time. This depreciation creates a massive legal shield against taxable income. So, while Amazon's cash flow soared, its taxable profit often remained at zero or even negative. This created a paradox, a company generating billions in real money, yet paying almost nothing in federal taxes. This is the loophole, using the tax code to force competitors to pay taxes on their profit while Amazon paid none on its cash flow. If you find this financial strategy fascinating, hit the like button and subscribe for more corporate deep dives. Your support helps us reveal the hidden mechanics of the world's largest companies. This aggressive reinvestment was Amazon's way of declaring war on every retail competitor. While Best Buy and Walmart were paying tax on their earnings, Amazon used that money to build faster delivery networks. They were competing against companies that had one hand tied behind their back by the tax code. This meant Amazon could offer lower prices, build better infrastructure, and ultimately deliver superior customer experience. It was a financial blitzkrieg disguised as consumer generosity. The competition was not just fighting a better retailer, they were fighting the United States tax law itself. The first major cash flow machine wasn't the bookstore. It was Amazon Web Services, or AWS. Oz was born out of Amazon's own need for massive server capacity. The creation of this cloud computing division completely changed their financial profile. AWS was structurally different from the retail business. It generated massive, immediate profit. This high-margin revenue stream began to subsidize the zero-margin retail operation. AWS provided the fuel, the massive, clean cash to feed the retail beast's endless expansion. This structure allowed Bezos to tell investors, "Don't worry about the retail profit. Look at the cash engine we built." The profit from AWS became another legal shield, offsetting any potential taxable gains from retail. As Amazon grew its global scale, created a new layer of tax complexity. They structured their business to record sales and profits in jurisdictions with the lowest corporate tax rates. This is a common legal strategy for multinational corporations, but Amazon executed it with ruthless efficiency. The company also leveraged complex depreciation schedules on its vast network of data centers and warehouses. These are assets that legally lose value over time, creating paper losses that reduce taxable income. In reality, the infrastructure was making them more powerful, not less valuable. The tax system was designed to encourage capital expenditure and research. Bezos simply used this incentive to its absolute legal maximum, turning a tax benefit into a competitive mandate. Critics argue this is immoral, exploiting laws meant for small businesses to starve the public purse. But Bezos' primary duty, as he saw it, was to his shareholders, not to the government's revenue goals. And his shareholders were overwhelmingly rewarded by this strategy of infinite growth over short-term profit. The strategy also had a critical psychological impact on the public. Because Amazon reported thin or non-existent profits for years, the public viewed them as the scrappy underdog. The narrative was, they are serving the customer so well, they can barely make money. This shielded them from antitrust scrutiny and public anger for far longer than a company reporting billions in profit would have been. The final genius of the strategy is that it built a cash flow fortress that is nearly impressive. The billions in cash that were not paid to the IRS went into the business. This cash was then used to enter new markets, often selling products at a loss until the competition was crushed. No other retailer could sustain losses as long as Amazon because they had to pay taxes first. This is the core of the unstoppable mechanism. The tax savings were immediately weaponized against the competition. The cash flow generation became a moat wider than any brand loyalty or network effect. The moat was the ability to legally starve the competition of oxygen. This long-term, cash-obsessed, profit-avoiding strategy is the defining legacy of Jeff Bezos. His vision was not about quarters. It was about decades of structural dominance. He prioritized market share and customer lock-in over pleasing analysts with temporary profits. This is why the mental model of inversion thinking is so critical to understanding Amazon. Instead of asking how do we make profit, Bezos inverted the question to how do we make profit irrelevant. The answer was continuous, massive, tax-advantaged reinvestment. It is a testament to the power of understanding the true rules of the game. The lesson for any entrepreneur is that your competitive advantage may lie in your financial structure, not just your product. Bezos understood that tax law is a business tool, just like logistics or marketing. His success teaches us that true innovation can be found in the accounting department. This financial blueprint allowed him to achieve a scale no one thought possible. The secret tax loophole was never a single hidden line item, but an entire corporate philosophy. It was a strategic decision to treat cash as a weapon and profit as a liability. The mechanism is complex, but the result is simple. Total market dominance. This is how Amazon became too big, too fast, and too structurally complex to ever be stopped. If you are ready to learn more revolutionary business strategies, share this video. Help us spread the truth about how the modern titans of industry truly operate. We will see you in the next documentary as we dive into another corporate secret. Stay curious, stay disciplined, and understand the rules of the game. Thank you for watching this deep dive into the business that changed everything.